Good morning and welcome to Beyond the SEAF model. This is effective for January 6, 2025. Let's get started. SEAF signals for this week. We have XLC, XLK, XLY, Communication Services, Technology, and Consumer Discretionary. Key thing to note here is the rankings. Relatively high rankings across the board. As we can see here, actually technology really being held up here by its tactical month and strategic quarter with a trading week of 11. The second worst for the week is industrials at 10. Seeing some strength on the weekly from energy and healthcare. As we'll see in just about a second, we're in a little bit of a transitionary period. We actually have no sectors in the avoid status, which does not happen very often. This is really screaming a decision point in the market. When we see this in SEAF, and by this, I mean we see high scores in the top three. We don't see a lot of avoid. There's a little bit of a shifting in the asset flows. I'm actually going to move right over into our heat map. As you can see here, we got a bit of a Picasso painting that we're looking at. We have reds and greens and yellows kind of all over the place. And again, that really screams a decision point. What is the market going to do? We're up today. Last week we had a net negative day in terms of flows. We had more outflows than we did inflows, though Friday had a very strong day at a 0.83% increase. Wasn't quite the 1% that we normally see on these big switch days, but coming a nice inflow day right over the weekend where people were going to hold exposure over the week does point to some bullish nature, but some confidence there in asset managers and being willing to hold their positions over the week. So that is something that we're kind of looking at. But the other thing to look at is just this weekly chart. And I'll highlight this a little bit more in the rainbows, but what we'd like to see here is we don't want to bite on any particular week. That's why this model is built the way it is. There's a reason technology is holding. We have a tactical month of 1 and a strategic quarter of 2, but we are actually net negative on the trading week. Now, it wasn't a super big move for technology, negative 0.27%. We like to see moves over 0.4 that show a little bit more conviction in their bite, but this is kind of a wait and see moment. As do we see continuation in energy and healthcare? They were amongst the worst sectors of all of 2024, and they'll need a little bit more room to get off the bottom than just 1 week of positive flows. The positive flow for energy was 0.43%, so that was significant, but we will need to string a couple of those together to get that up into the favored ranking. Overall, again, wait and see. SEAF next week will be really important. Do we get a continuation in the trading week that'll start to bleed into that month? Or are we in a new paradigm as we see energy and healthcare move up? That we don't necessarily know yet, but it'll be something that we need to look at next week. Going into our rainbow charts, Communication Services. Communication Services was a top-ranked sector for this particular week. We came back in and tested that neutral ranking throughout the week, and then rebounded a bit, seeing a nice little flip in the relative outperformance. We do have a broader uptrend in Communication Services, which is nice to see as our top sector pick, or our top signal. Looking to healthcare, this is something I wanted to highlight. We saw healthcare came in 2 on the trading week. It did break itself out of the avoid that we've been in for the last couple of months. So we've had that really steep dart decline in the relative performance versus SPY. It seems to have stopped somewhere about mid-December, and we're starting to this little bit of a sideways movement in the relative outperformance. But as you can see here, we have a 2 ranking, but it's really still being held down by that tactical month and strategic quarter, which is why we're not biting on it yet. We need to spend a little bit more time in this neutral and then moving into favored to get any kind of relative performance similar to that we saw here at the end of June, early part of July of last year, that we went from a long period of neutral and avoid into favored that produced that relative outperformance. We'll need to see that same type of movement in the SEAF ranking in order to get that really big relative outperformance spike that we would need. Looking at our utilities. So utilities is not a SEAF signal, but it's kind of knocking on the door, and it has that momentum pattern that I like to see. Strategic quarter of 9, tactical month of 6, and weekly of 3. So it is starting to trend in that right direction. If we can start to build that accumulation, we will potentially see a little bit more favored ranking and relative outperformance. We are currently in a sideways pattern in its relative performance versus SPY after having a little bit of a downturn. Utilities was a big relative outperformance gainer for us last year as we picked up much of the July through October move. We're a little bit sideways both in the relative outperformance chart as well as the SEAF chart, but a continued trend as we are seeing will get this thing into favor and potentially a SEAF signal, but nothing to do yet as we are just knocking on the door of favored. Similar thing with energy. We're seeing a little bit, energy had a little bit higher of a spike in terms of its weekly, which we can see correlated with a little bit more of that relative outperformance on the bottom half of this chart. But again, this has been in a deep avoid for a good part of 2024 with, we had little brief interludes of favored. Wanting to see a nice trend upward into energy, we would need to see a couple of more weeks of the trading week hitting that one spot or in that top 1 or 2 or 3 in order to really build that momentum up to get us into that upper neutral and favored ranking. Nothing to do here with energy yet, but starting to see a little bit of turning on that relative outperformance. And we will need continued flows to back that up. So nothing, again, we're not projecting. I'm not saying that we're going to see another 1 on the week for energy next week, just that we're starting to see the tides turn a little bit for energy. It was a significant trading week at a 0.43%. So just a space to watch for now. Last but not least, technology. What I wanted to highlight here is we held favored. Technology has been really in a sideways pattern in this relative performance, really going back to August and September of last year, 2024, with little brief interludes of positive relative performance and little brief interludes of underperformance as well. We were holding firm here on the favored. It was able to kind of stop on a dime. We had a lot of money flowing into technology late last year with, as you can see, tactical month at 1 and strategic quarter at 2. But overall, again, another decision point for technology. Can we rebound from that 11 for that trading week and get back in this upper favored territory and pick up that relative outperformance? Or, are we going to crash down into neutral? The overall theme of this is that we're really at a decision point. SEAF is screaming a decision point at us, or, so where we go from here could set up a trend that goes on for a couple of months, or we can continue to kind of middle until we re-identify the sectors that we need. But as of right now, we're kind of in that middling pattern. So that is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.